A very beautiful morning to everyone. My name is Victor, and I'm going to be your host this morning for Rally Trade. So here we're going to be making money daily. Um, I'm sure you are all here to make money, and that's what I'm here to help us make. Now, basically, let's just see. I think about 23 persons on call. Let's just get more persons to join this call before we proceed actually. Uh, so as to avoid going back and forth again, right? To avoid going back and forth. Okay. So just hang in there. Let's just in the next 2 to 3 minutes max, we can actually start the review properly. So let's just wait for others to join the call. Okay, so I guess we can't wait for everybody. So let's quickly just start the review. So let me just confirm if you can actually hear me because I'm trying to fix my audio here. If you can hear me, please just help me with a yes on the chat box. If you can hear me, kindly type a yes on the chat box so I know we are together before we actually proceed. So I'll not be talking to myself. If you can hear me, please, I'll need a yes on the chat box to confirm my audio is good. No one can hear me. Is my audio good? Oh, thank you, A1 Wisdom, Femfos. Oh, all right. So I guess it's good for my own end. Thank you very much for your responses. So let's start the review now. Basically, once you want to trade, what we are doing is actually buying and selling, which constitute demand and supply. And demand and supply don't just happen like that. They are caused by a number of variables. Um, People buy because they need it. People sell because they want to offset it, possibly to make money. All right, it's business. And what we are actually doing to make profit is we are actually following the movement in price. So whatever price you are buying from, the difference between what you will sell in future will determine your profit. So if you sell high, you make profit. If you sell lower than you bought, you make a loss. And vice versa, if you sell higher than if you bought higher than you sold, you make a loss. And if you bought lower than you sold, you make profit. So in other words, what move price is very essential here. So, and there are a number of ways we can trade. There's technicals, there's fundamentals. Now, each of them, they complement each other. And in fact, there's also sentimental analysis, right? But basically, the fundamentals and technicals are two of the major things we usually look out for in order to understand our buying and our selling premises. So let's just quickly look at the fundamentals we have for today. For today, Thursday, 26th of September, in about a few minutes' time, we're going to be having that of the CHF, that's the Swiss National Bank Monetary Policy Assessment. Um, Basically, just think of it like your NFP now for the dollar. So for the CHF, that's the Swiss franc, this is more like their own kind of NFP, right? So this CHF has been doing well for a while now. They've been having lower and lower inflationary figures, which have been very good for the Swiss franc. And in fact, they are even forecasting a further drop in the inflation rate by either 25 or 50 basis points, which should be good for the currency in the long run. Okay. So we're going to see that data in the next few minutes, which should give us a much more clearer view of what we possibly might be doing. So consider the CHF pairs. You might want to be buying the CHF against other currencies. All right. You might want to be buying the CHF against other currencies. If you check USD CHF, see some downward pull has been going on massively. Then later today, we're going to also be having the USD by 1:30 p.m. Local time. That's the final GDP. So we usually have three GDP. We have the advanced GDP, which is quite more like the most important part of the GDP actually. The advanced is more like the strongest one. Then we have the preliminary GDP and the final GDP. So this one is basically an adjustment to the inflationary rates. The final GDP is like an adjustment to the inflationary rates that we've had from the US dollar. Okay. And I think it was, so this one is released quarterly. So every 3 months, I think March, June, September, December, so we usually have this one. So this is for September. Now we're expecting an actual greater than forecast will be good for currency. So we need to see this guy good. Now, on the other hand, if it comes out bad, it's also good because you can trade either buying or selling, right? The dollar. This will give us a clearer view on if we are going to be buying the dollar against other pairs or possibly selling the dollar against other pairs, right? So unemployment claims also. This one is more like a frequent data being released. This is just talking about those persons who fight for unemployment for the first time in the last week. So this is not a far back data. And also by 2:20 p.m. rather, the Fed Chair Powell is going to be speaking again. And we all know when Powell is speaking, the market responds massively. So today, as much as we're just going to be looking at technicals, we have our fundamentals that can either support or temporarily halt our analysis. So let's quickly dive into the charts right now. Okay, so just we talked about CHF, right? We talked about CHF. Now, you see what I was telling you about the fact that on this on a 1 hour time frame. Now, the CHF, USD CHF, USD being the base currency, has been weak compared to CHF, which is the quote of a counter currency. Hence, we've been having more like a downward movement, has been going on. And if I check my 4 hour time frame, you could see that from around from second quarter of this year, since around April, we've been having more downtrend. And before then, it even started to range. Okay. So is it this the Swiss National Bank monetary policy today is going to possibly give us another direction for where price is most likely to move today. And hence, you'll notice that because of that particular news that is going to be released today, CHF has been doing more of ranging at this point here. It has been ranging. So we need that decision in order to give us the future direction of the CHF as of now. Okay, let me see. All right. So I'm trying to avoid giving out some stuff because some persons will start coming in, hey, what are we doing? Or just start dropping currency pairs. Oh, analyze this, analyze that. Meanwhile, we've done that fast. Okay. Let me take this out. So let's go over this again. So see what our future direction can be for CHF. Sorry, excuse me, just a moment. I want to, okay. All right, so this is where price is at the moment for CHF. Now, if you remember from my introductory statement, I mentioned the fact that what market is doing, basically, it's moving from area of supply to area of demand. Price is basically moving from area of supply to area of demand because the market is all about demand and supply. And if you don't understand that concept, trading will most likely still remain very difficult for you. Trading will still remain very difficult if you do not understand the concept around demand and supply. Now, there are a number of strategies out there that people usually look technically to trade. But you see, they all move. What you are seeing on the chart here is price movement, and price is basically moving from a point of supply or demand to supply, buying and selling, buying and selling. Now, we can also replace that what we call liquidity, because if there's no liquidity in the market, price cannot move. If people are not buying, if people are not selling, price cannot move. So everything is about liquidity, everything is about demand and supply. Now, how do you understand, or how do I know where my demand and supply zones are on the chart? Let me just teach you this simple strategy in order to always try to forecast what is possibly going to happen. Now, at every point in time, if I go to my daily time frame and I zoom out, you will notice that price does a lot of movement. You see downward movement and upward movement. So what I'm going to show you here, you can just do a copy and paste to every other chart. Copy and paste to every other chart. So let me take my time doing it for USD CHF so you'll understand what I'm talking about, okay? Up and down and up and down. So that's what price is basically doing most, in fact, at every point in time. There are few occasions where price will just be ranging, but price will not range for long because price needs to move. Okay, price need to move. Okay, so now you understand what I'm trying to do, right? I'm just trying to point out the fact that price goes up, it goes down, it goes up, it goes down. Now, what I'm talking about is the fact that every time price is going up, it is moving from areas of demand like this all the way to areas of supply like this. That is what price is doing most of the time, moving from area of demand to supply all the way down again to demand, back up to supply, back up. Now, if you now ask, okay, what is this? What is the trend of this particular instrument at the moment? What is the overall trend, the general trend? You can say, okay, I think this trend is a downward trend, right? All the way down here, all right? But in between the downward trend, you have upward movement and downward movement. So let me make you understand what you are seeing on the chart right now, okay? Let me just do a little bit of simple analysis. Let me clear my chart. How do I identify my demand areas? So this is my daily time frame. It will be much more preferable if you do this on a daily time frame. In fact, it's much more effective if you do this on a daily time frame. Now, what are you doing on a daily time frame? You are just checking for simple things. For instance, you see up here where you have these three bearish candles, 1, 2, 3. Okay, there's a doji here, indecision, and 4, 5, 6. Now, consistent downward movement for the USD CHF it signifies that sellers are very active in this market, which shows that there's massive supply, all right? There's massive supply going on at this point. So what you do is you mark this level here, all right? Now, which candle started that move? You can mark it all the way here down, and you extend it to the future. Now, we are interested in the candle that precedes the one starting the move, which is this bullish one right here. If I zoom in a bit so you can see it. All right, which is this bullish one. So what you do is you mark the high and the low of that particular candle. Okay, so you bring it, extend it to the future. Okay, now I can further extend this guy to the future, basically anywhere around current market price, something like this. Okay, so I can have my area of supply like this. Now, it doesn't just happen once, right? So you notice another one right here. But the problem now is if you don't have like three consistent consecutive candles. Now, there are different kind of candles. You see a candle like this one, when you see something like this, um, there are three types of candle. For instance, you see any candle like this. Basically, the body of the candle is covering more than 70% of the total size, including the wicks, the high and the low. Now, this kind of candle is what we call an explosive candle. Same for this, almost same for this. Now, there are also candles that are decisive candles. Candles that something like this that covers more like 50% of the total size of the whole candle, right? They are called decisive candles. And if you see something like this that covers less than 50% of the total size of the candle is an indecisive candle, right? So for a demand or supply area, so to say, you need at least a decisive or better still an explosive candle pushing price downward. Now you need like three consecutive, either explosive or decisive candles pulling price downward. It shows you that there's complete supply at that particular area. No wonder the next time price go back there, you can see price coming all the way down, okay? And the same thing for demand. The same thing for demand you want to see. Now, if you can identify those areas, it's good for you. Sometimes, temporarily, price can halt. Okay, so this can also be our demand area. You see this explosive candle that push price. So what we call this is leg in, base, and a leg out. Okay. Now what I'm trying to teach is this: you need to come for trading. See, if you understand how price moves, trading becomes very, very easy. I don't have enough time to start breaking all of this thing down. I don't want this to turn to a training session. This is just basically analysis, right? But I just need to lay that foundation for you to understand that, look, price is moving, money can be made, all right? And I'm going to show you practical examples of how that is going to be done. So price is currently ranging on USD CHF right now. There are so many things I want to tell you, but I cannot tell you all here. So do well to attend Rally Academy, where we actually show you how trading is being done. So price can either, from the news that we're going to be having today, price can decide to pull up. So we need a break either above, or price can decide to break and keep going lower. Basically, we've been noticing a downtrend, so it will not be surprising if price breaks and goes lower, okay? Now, how we are going to be anticipating this is the fact that when that particular news comes out, once price breaks above, we need a break above, a retest, and a continuation. Basically, price is going to continue that particular trend. Now, if we are on a trend, you can just use some simple tools like your trend line, your Fibonacci, to catch some retracement in order to follow the particular trend. So basically, we don't have a clear direction for USD CHF, but I'm going to be buying if price closes above this my range here, and we are going to be looking out for a sell once price can close below our range here, right? So once price close above this range here, we can be buying USD CHF, and I can assure you it's going to be a long buy. At least it's going to buy for a while. It's going to really, really buy for a while. And alternatively, if price closes below our zone, it's going to be a long sell. All right. So, guys, that is for USD CHF. We are waiting for the fundamental to give us a clear direction of where we are going to. This is our USD JPY. For those who know USD JPY, this guy has always been on an uptrend. Mostly for my weekly time frame, you can see this guy is massively on an uptrend. Even on my daily, massively uptrend. But we've been experiencing some major pullbacks from the middle of this year, second half of this year. Some major retracements has been going on. But I think for my 4-hour time frame, it's looking like price is starting to go bullish, right? Price is starting to go bullish on our USD JPY. Now, how do I trade this guy when it is bullish? Because bullish means you want to look out for buys and buys and buys, okay? So when you want to buy this guy, there are a number of things you need to consider. First, remember what I said, price moves basically from supply to demand, right? Now, for price to be going up, it means that it's usually moving from point of demand. Demand is more like your support, okay? Your support areas down. Now, I need area where I have either 3 decisive candles like this, or I have a massive explosive candle outward going to the upside like this. So I mark the candle preceding that particular move. So something like this. Okay, so now this massive move here, this bearish candle started the move. So I'm going to be considering from here all the way out, as my demand area. I usually like having it as green. So in order to separate my demand and supply, demand is green, my supply usually I use red for it. So that's one. Now, where else do we have massive buying happening again? You can see from here, isn't it? Now, what happened when price moved away here after some retracement? Now, you might experience one of two things, all right? One of two things. So let me show you. Once price has done this, especially after breaking a previous high that we have here. So price got to this high, came down, ranged. All of a sudden, you saw this massive candle that broke this high and gave us a new high. So you can just simply apply your fib from the swing low here all the way to your swing high here. Now, majorly, we are usually targeting our golden zone. We are targeting our 50 and our 61.8 retracement level. Basically, the 61.8, but I prefer in between the 50 and 61% retracement level. Now, if it has a more, it holds more weight. If the 50 and the 21% retracement levels coincide with the previous high that was broken by the move to the upside. Now, let me show you something. Now, this was the previous high. So we have a higher high, higher high, higher low, higher high, higher low. All right. Range there again. Now, from here, this is another low. It made another high, which is here. Now, breaking this previous high, right? So I mark this previous high as a resistance level. Then I push it forward. Now, guess what? See, guess what happened here at this level? Now, notice that the previous resistance that price just broke from this massive move to the upside coincide also with my just above my 50% retracement level. All right, just above my 50% retracement level. Now, my 61.8 retracement level, which is my preferred zone, is slightly below it. Okay, which means that even at my 50% retracement level is also very good for me to buy at. All right, double coincidence. 50% retracement level coincide with previous resistance. But now you understand that when price breaks a resistance level, there's a very good chance that that resistance can become another support, okay, in future. So that was why price was able to retrace from here. Now, notice that this high that price got to, when price moved from this 50% to the high, it did not break it. That means price was not having enough liquidity. Like there's not enough money in the market to fuel that massive buy that can break this level. So price can potentially come back to my 50%. Now, guess what? Once you take a buy at this 50%, where will you have your stop loss? Most persons will have their stop loss below here, right? Okay, so let's not go into that. That's like another topic for another day. All right. So notice that even if you buy again at your 50% retracement level, price just starts slightly below, and you can see the massive movement. It has enough liquidity, enough supply to fuel that demand that we are looking for to break this previous high. So you keep attacking the market again. Now, what you do again is to change. Excuse me. Now, if I place a buy from here, and price went as high as this, how many pips did we get from that particular move? Let's even say if I do this like this, let's say basically we got almost, almost 40 something pips like that. Now, what we can do is if I'm using 0.01 micro lots, come on, I might not make much on this guy, just 3, 4,000 basically, highest 0.02, But imagine if I use 0.1, I make some massive money. And there are people who, the same move that you took and you made 3,000, 5,000, someone else is making 50,000, someone else is making 500, another person is going to make 5 million. Now, the same opportunity presented itself once and twice. Now, some persons have cashed out already massively. And I observed recently because vast majority of persons, 100K, 200K, 500K, trust me, you cannot make that million that you are looking out for. You cannot make that million you are you are watching to make or looking out to make in the market. No, so trading is going to be hard, actually. Let me just tell you the truth. It's as blunt as it can sound. The truth is that you hardly make serious money when you are trading with peanuts in the market. Your 50K, your 100K. Yes, we tell you it's a starting point. You can actually start there. But if you really want to make money in the market, imagine you have 5 million, 10 million in the market. Now, that is your capital, for instance. That is when you are actually trading, because with my 5 million, for instance, I just want to risk like 1% of my 5 million, which is approximately how much? Is that not just 50K, right? So imagine that I can go in with a standard lot, just have my stop loss somewhere below here. And if price gives me this move alone, I can have like 300, 500K to myself, one move. I do it here again, I make another 500 or possibly 1 million, in just one day that price made this move or within 2 days, I'm good to go. Now, that is where trading is a business for me. Unlike where the first time I got like 3,000, 5,000, the second time I got another 3, 5,000, you are always tempted to look out for more trades, right? So let me just tell you the truth is that a lot of persons are trading this thing as a business, while some others are trading it as you are gambling, actually. You are gambling with your 50K. If you tell me use 50K to make 500,000, you gambled and there was an element of luck on your side. You are not actually trading, okay? Now, imagine that price now went up. Now, price went up from here, retrace, and finally broke this high. Anytime a high is broken, let me mark this guy. Anytime a high is broken, which is this place here, was finally broken to give us a new high, isn't it? So I'm going to adjust my fib level from the low that fueled that high that was able to break that particular resistance level. Now, this is just a continuation strategy so that I can be flowing along with the trend. You can make money practically almost every day or every 2 days on just one particular instrument. Now, you can tell how much I've been able to make from USD JPY from following this simple Fibonacci retracement principle once I can identify the trend. So I can do this thing also. I'm waiting to do it also on USD CHF once the trend is also known. Okay. So I apply from swing low all the way to swing high. Please, I'm sorry. I think I've been talking to myself for a while now. Please, do you understand what I've been saying? If you can understand, or if you've been understanding what I've been saying, just type a yes on the chat box. And if you don't, type no. So I'll know where we are. Let me know if I'm to recap or anything. If you understood what I've been saying since, just type a yes. Okay, excellent. Excellent. Just two persons. Mr. Koledo. Only two persons understand. That means the vast majority of persons on this call actually do not understand what I'm talking about. I need more responses. This sample size is too low. It's too low. I think I've just been speaking over my head. I've been speaking over my head for a long time. Hmm. If you come to this call expecting me, my name is Victor, by the way, and they call me Bishop. If you expect me to just tell you, oh, USJPY buy, USCHF sell, I'm sorry to disappoint you. I don't want to give you fish. I want to actually teach you how to catch the fish. You don't need me to always buy and sell. You can do that at your convenience, all right? What I just need you is to understand the basic concept behind the market movement so that trading will not be frustrating for you again. So let me just ask, you are trading basically with your 100K, 200K, 3, even 500K. And it looks like every time you enter the market, you always start from your spread, that negative. The spread just starts increasing. Like market just starts going against, it goes the opposite direction. And when it's against you, it looks like the thing is going very fast, in negative. But once it's in profit, it looks like going slower, right? Now, how many of you have experienced such? Like you enter the market and the market is just going against you, like massively against you. If you've been in that shoe, just let me know with a yes on the chat. Just a yes on the chat. Now, I'm just showing you this simple strategy in order to help avoid that particular situation. It can be very frustrating, trust me, very frustrating. Only two persons are answering me. Is it that others can't hear me? Please, I need your responses. Even when I asked the audio, I think still A1 and stuff that answered. Please, if I don't get more responses, I don't think I can continue on this call right now because I'm not sure everybody can hear me.
Good morning.
Okay, good morning. What's your name, please?
I'm Dr. Akindele.
Okay, so you can
I've
hear
been
me.
following, but can you kindly recap, please? Thank you.
Okay, all right. I will recap. I will
Thank
recap
you very
quickly.
much.
All right, all right, all right. So let's have everybody muted again. Okay, so I need to recap, right?
Yes, please
Oh,
do.
okay. All right, all right. So I was saying price actually, all of this movement you are seeing here, they are actually not random movements, so to say. They are not random movements. You don't have random movements in the market. Mark price just respond to something, which is the movement of money. Now imagine that imagine I have 5 billion in naira and I need to convert my 5 billion to dollars, right? Now I go to build the change. Now there's a very high chance that one person cannot exchange my 5 billion to dollars for me. There's also a very high chance that 2, 3, 4, 5 persons might not have that enough dollars to exchange for my 5 billion in naira for me. I have 5 billion naira, but I need that 5 billion exchanged to dollars. So what I want is, I want a situation whereby I will have enough dollars in the market to exchange my 5 billion in that. So for every demand, there should be an equivalent supply to fuel that demand move. Okay. So if there is not enough supply, for instance, for price here, I cannot have this explosive move for price to go to the upside. Now, how do you know that there is not enough supply for demand to happen, for price to pull up? Before price can go up, price needs to come down, isn't it? Yeah, because every time we have price going down, that's supply. And after supply, we should naturally have a demand, right? So to say. Now, depending on the trend. Now, if you see price doing this, price went up from this high, it came down, went up again. Now it has formed a double top for us, right? What it's telling us is that if I'm having an upward movement, that double top, I'm supposed to be having higher highs, price going higher, higher. But if price is ranging I have a double top, possibly price goes up again, from here comes down, I have triple top now. It means that there is not enough supply in the market to fuel that price going to the upside. Now, what do I need to see for that particular upward movement to happen? Now, remember that from this demand area that gave us this upward push to this high, the move started from here, right? And I marked it. The candle preceding the one that started the move, which is this bearish candle. So I marked the high and the low, and I extend to the future. Now, price got here, came back, got here, it couldn't go. As it's coming back, it's looking for what we call enough supply, which we usually term liquidity in the market. Liquidity in the market. Now, where is the best place to find liquidity in the market? The previous demand area. The previous demand. Now, notice that the moment price could tap very close, or sometimes it taps into this area, you have an explosive move to the upside. Now, this is just trying to explain the fact that price is not moving randomly. But the challenge you have is the fact that you don't understand what you are seeing on the chart. Hence, at every point in time, you consider this place to be a resistance now. And the basic rule we all learn from trading when we're starting out is that buy at support, sell at resistance, right? So naturally, I wouldn't be shocked if, as price went up here, some person say, oh, this is a resistance area, let me sell. Now you end up selling and price goes against you now. I don't know if you get my point. Now, this can be very frustrating. That was why I asked, how many of you have been in that position where not just once, not twice, not 3 times, in one single day, like you had like 5 trades or 7 trades. Now, almost the 7 trades just keep going negative, negative. And it looks like, I don't understand. You know, it's because you don't understand the game. Oh, okay. There's everybody option has been visible. Okay, okay, okay. All right. Thank you so much, Joy. Thank you so much. I really appreciate it. I didn't pay attention to that. I was just focused on the analysis. Okay, now I get. Thank you so much. I really appreciate it. Look, man, that has been your story. Wow. Yeah, that was my story before I had to do some research, dive deep, learning to understand. You're welcome to understand the dynamics behind this. It's just the movement of price, movement of money. So anytime, so this is the simple, let me just give you that simple, should I call it a cheat sheet? Let me call it a cheat sheet. Now, once I give you this cheat sheet, trust me, it works like fire. So what I need you to do is, I need you to take this cheat sheet very serious and make a lot of money from it. Now, what do I mean by the cheat sheet? When I can ascertain the fact that price is on an upward movement, and how do I do that? I can use either my daily or preferably my 4 hours. And on my 4 hours, I see price doing higher highs, so higher high, higher low, higher high, higher low, higher high, higher low. Basically, so I'm okay, price and an uptrend. I can come to my 1 hour, or you can even use your 15 minutes as the case may be. So for instance, this is my 1 hour chart right here. And I just want 2 things. The first is, I want to see where there's an explosive move to the upside. There are 3 types of candle I mentioned earlier. There is this one here that's a decisive, explosive candle. There's another that is a decisive candle, and there's another that's indecisive candle. I need either a decisive or an explosive candle, moving price massively to the upside, preferably if there are 3 consecutive candles like that. So in this case, we have 1, 2, 3, 4, 5, right? Now, if it is not consecutive like this, that one single one should be very massive. The size should be significant, okay? Something like this. Now, what I do is I look out for the candle preceding the one that started that massive move to the upside. I mark the high and the low of that candle, which I did here. Now, what happens is when price gets to that high and you see some retracement to the downside, you can apply your fib, something like this. Apply your fib. I need to take out this one first before I apply this. I need to take out this. Okay, apply your Fibonacci retracement. Basically, from your swing low that started that move, the lowest point that started the move, all the way to the highest point before you see that retracement happening. Now, like I said, I'm waiting for price to get to my 50% or my 61% Fibonacci retracement level. That's one. Secondly, check out for the previous high that was broken by that because that move should break a previous high, obviously. It should break a previous high, which was here. So we have a higher high, higher low, then another high. So mark out that previous high that was broken, extend it to the future. If the resistance you just marked on the previous high coincide with your 50 or your 61.8, in fact, that's a golden zone. All right, that's very, very strong. So you can obviously continue that movement from there. So because we expect a higher. Now, in situation where price get to this point like it did here, our 50% tapped into it, went high, but was not able to break the previous high that was created from that high, was not able to break because obviously we expect it to give us another higher high, typical of an uptrend. If it doesn't, that means there is not enough fuel, let me use fuel, to sponsor that trip. There's not enough liquidity, enough money in the market to sponsor price breaking the previous high. And that means price is bound to come back there again. Or sometimes if price feels that there's not enough liquidity at your 51, 68, 61.8 level, price will do a massive rundown back to your demand area where that move actually started. The moment it gets there, most often than not, you should have enough liquidity, enough strength, enough fuel to break that previous resistance. Okay, you should have it. So once things are happening in the market like this, you should be able to understand. So fast forward to current market price. What am I seeing in the market? I think this should be more of an interactive session. Fast forward to current market price. Sorry. Okay. Someone saying something here. What about stop loss? Okay. Now, fast forward, we've spent enough time on this guy. We need to just quickly look at other instruments. So what I'm going to, we are going to be copying and pasting what we just learned here into other charts to help us understand what we are supposed to be doing. Okay. Just copy, little copy and paste. Now, fast forward to current market price. Now, I have a previous resistance level here that was broken. A previous resistance here broken. I think we should go to gold next, right? Previous resistance broken here, that's one. Two, where did the move start from? The move that broke this resistance, where did it start from? It started from here. Okay, to my swing. Now, I'm not seeing retracements now, right? So this is the lowest point of the move that broke this resistance. Now, all I need to do is to wait for that period where price starts coming down, right? Now, I would like to wait for price mostly at my 50 or my 61.8 retracement level for me to continue my buy. Now, possibly if price push higher and this guy is extended, this our resistance broken might be able to coincide with that 50 and 61.8. So immediately price gets there, you can buy at that point, and you can also have your stop loss below the next fib point. So if I'm buying at 50, my stop loss should be at 61.8. If I'm buying at 61.8, my stop loss should be at 78.6. All right, so as the case may be. So let's quickly move to gold. Let me just quickly tell. So now, what are you seeing on gold right now? My 4 hours, you can see a clear movement to the upside, right? But you see, gold has been predicted to keep pushing higher. You're welcome. Gold has been predicted to keep pushing higher. So what I'm looking out for is swing highs, and further swing highs. Now, on my 1 hour time frame, I have from this previous resistance, this particular move here, right here, fueled this level here. Price has been doing a retracement, but it has not gotten to my 50. Oh, it almost got to my 50%. It has been struggling. So what you are doing is, if some persons might be saying, oh, I'm not buying until it gets to my 50 or my 61.8 retracement level, so to say, because I can see some explosive movement out here, like consistent rise in price, clearly breaking above this previous resistance that we have here. So very simple strategy to keep trading in the trend. This is just trend trading that we are doing right now. Understanding demand and supply. So price is on a demand run, right? A bullish run at the moment. So I want to keep buying, but you don't just buy at every point. You need specific areas to buy. And this is just a simple technique to understanding how to find your entries to buying this market. So gold right now, we don't have a clear-cut buy. We need price to still tap below. Like I said, the golden zones you should have is 50 and 61% retracement level. They are good enough to fuel another movement to the upside. Now, some persons might want to argue based on what I told us. So now this previous resistance that was broken right here, sorry, now was broken here. Now it coincides with just below the 61.8 retracement level. That means if price keep retracing, there's a high tendency that it might not stop at 50. It might go all the way to 61.8 or even tap slightly lower. Okay, that means your 50 might not be strong enough. 61.8 might not really be strong enough until price gets to your previous resistance, so to say. Okay, so that is just some simple techniques. Now D40. Okay, this is 30 I have here. I need D40. Let me just quickly so we can round up. Okay, so are you guys still with me? Are you still with me? Okay. Now, the same thing for D40. This guy is trying to create a new high at the moment. Okay, he's trying to create a new high at the moment from D40. It just clearly took out the previous high that we've had in the market for a while now. And that high has been respected well enough. So now I'm not surprised the fact that this guy is massively in an uptrend. So higher highs needs to be created, needs to create a new high. So it's just a matter of time. And I think price is about doing that right now. So let's follow this particular trend. We've established price in an upward movement, right? So on my 1 hour time frame, remember, if I had applied my fib level from here, this swing low, all the way to this swing high, because we had a break from this resistance level. Now, funny enough, there was a gap. It was a gap that gave us this high, right? Basically, the resistance is naturally supposed to be around here. The resistance was supposed to be around this level, which coincides with my 50% retracement level, so to say. Now, so if I from swing low to swing high and I start seeing retracement, now where the price get to and it stopped, exactly my 50, just slightly below it. So if I have my buy here, right, so I should be good to go, should have made massive profit. Now, this is D40 indices, quite heavy instruments. Now, I don't think anybody should be trading this guy with 100K, 200, 500. If you don't have up to 1 million and above, please just leave this guy, because this guy can actually make you money or crash. I know some persons have blown their accounts on D40 or D30 then, because you are gambling. If you are using a small account to trade this guy, it's a gamble. If I ask persons on this call right now, if probably you've had your account, you've had your hands burnt before, you've lost some money in the market, guess what? D40 or US 100, US 2000, most likely are those instruments that can do that to you. And it's so because you are trading them with a small amount of money. Now, if you really understand what you are doing in the market, your risk becomes less, because your methodology, like this methodology I just showed you now, is able to give you profit. Now, if I have price do this thing 10 times, at least 7 times I will be right. At least 7 I should be right. Now, because the market is never 100%, so never 100%. Even when your analysis is spot on, you can still have 1 or 2 bad experience. Price might not really respect. Fundamentals can come and change the direction, so to say. But if I have this 10 times, I should be right 7 times. So, like Soros said, it doesn't matter how often you are right or wrong. What matters is how much you make when you are right. and how much you lose when you are wrong, right? Most of us, we allow our trades to run, when you are negative, you are hopeful, you lose a lot of money. And when you are in profit, you quickly close the profit. Why? Because you know the profit can turn. But imagine me using a one standard lot on D40. You see, just this move alone, this explosive candle alone, massive amount of profit. Now imagine I waited until price broke the previous high. Massive profit. Like, you are done. I should be able to have up to 2.5 million from this particular move all the way here with just a standard lot, right? That is for those persons who are trading. Yeah, gold does that also. Gold does that also, all right? So you can see that these guys don't move randomly. These guys do not move randomly. Now, let's check out what I told you earlier. Check out what I told you earlier. Now, you see an explosive movement to the upside, right? Which candle started the move? The one preceding the one that started the move. This one. So what do? This clearly shows me there's massive demand around this area. So I mark that area here from the high all the way to the low of that candle that started it, right? I extend it to the future. Now, price came here, okay? It even gapped up. Now, for price to break a previous resistance to give me this new high, it needs enough liquidity, right? So in this case now, price came back. The moment it tapped back into that my demand zone, what do you see? Massive movement started again to the upside, okay? Which was able to break the previous resistance. So we are not doing guesswork here. We are not just trading randomly. We are not gambling. We are trading like professionals, right? Now, for you to trade like professionals, if you really, really want to make money in the market, once you can have good funds in your account, we are going to be taking trades like this. If you take 7 to 10 of these trades, trust me, guys, in a week, in a month, you are good to go. All right. Yeah, Lukman, you said, wow. Yeah. Trust me, this is like a very, very simple strategy. There are other strategies that they're not complicated actually, but I can show you like 3, 4 strategies that you can use to make consistent profit in the market. But the vast majority of you cannot do that because you are only having just small money in the market. So guys, I think by Wednesday, next week Wednesday, you can tune in. We are going to be doing some crazy strategies like this. Sam Banks is going to be taking those strategies. Trust me, I learned a lot from Sam Banks. So I can assure you that whatever I'm telling you here, Sam Banks is going to give you more of that. That's one. So it's going to be Wednesday. We are going to be having 3 Wednesdays of these particular sessions. Now, it's only limited to people who have at least ₦1 million in their accounts. And I can assure you, after these 3 Wednesdays, or in between, you can even start trading. You should be able to, if not double, triple, 10x your account by that time, right? So this is the first time we are going to be doing something like that. And I can assure you, there's a lot of money to be made in the market. I don't know how many of you are ready to do that, actually. So which other chart should we go to? So this is for D40. Now, D40, I have this move from here that sponsored this explosive move to the upside. Now, let me take away my FIB. Let me take away my FIB, for instance. Now, price gave me a move to the upside. This, my swing low. Okay, I think we've talked about that. Let me see. Let me show you. So I have a new high, and the high started from this level here. Now, guess what? I have 3 explosive candles to the upside. Which one started that particular move? Let me adjust this. Always pay attention to explosive moves in the market. These are key areas of demand and supply. I had this explosive move. Now, that started from this high and this low. I extend to the future. Now, guess what? Price tapped back into it and continued, and it sponsored a movement higher than this previous high, right? So now, until I see a retracement in the market, so I've bought, I can use my demand area to buy explosive move. Then I use my Fibonacci retracement to continue that move. Now, FIB is not useful now until I start seeing retracement. So if it retraces back to my 50 or 60, 61.8, then I continue buying it. So I'm a striker, I'm a midfielder, I'm a defender in the market. I'm defending my stop losses. I'm a midfielder by assessing which areas are most likely priced to stop and make massive move from. I'm an attacker by attacking the market at that level. So that is how I make my money in the market. And I can show you these strategies. No, so come Wednesdays, we're going to be showing these strategies. Okay. Just before I close, I'm going to do that. Just before I close, I'm going to do that. So I think we should be good to go. This is 2 minutes to 9. Right. Okay. Price pull downside. We're not having a clear direction yet on our USD CHF. Now, somebody can ask, why don't we apply this strategy we've been applying to USD CHF? Why don't we, the one we apply to USD JPY, we apply to gold, we apply to D40. Why don't we do the same for USD CHF? It does not work when price is ranging. I need price to clearly be in a clear trend. Now, on the other hand, what can work when price is ranging? Now, that is another strategy, because for every movement in the market, you have enough strategy in your arsenal to be able to attack the market. So since price is ranging at the moment here, now what I'm going to be looking out for is my key areas of demand and supply. Simple. Now, I've showed you how to identify your demand areas. Now, the same thing is for your supply, right? So now there's an explosive move to the upside here. This is more like a rally-based rally move. Don't worry, if you attend our academy, all of this can be taught, rally-based rally move. Now, which candle started that particular move? So let's just do a little practical here. You find out that this guy works magically. So this one, now we have this bullish one, but we have a previous bearish one. So basically, you use the candle that is how do I put it now? The smallest candle. Basically, an indecisive candle is usually used to measure them. So this one, this is the bullish one, is the indecisive. Although this bearish one that pushed price downward is the one preceding the move. But in this context, so we are going to be using the context now, the smaller one here. So I draw the high and the low, and I extend to the future. Now, what do you see? What do you see? Now, the next time price tapped into it, you can see it was gaining momentum and all of a sudden explosive. It does not have enough momentum to push very high. Not until what happened? It really tapped into the zone. But this is where the concept of liquidities now matters a lot. SMCs. It swept out liquidity, which is all your loss stops and all that. Now, before you could have that massive and other explosive to the upside. Now we keep having demand. So you can keep extending it. Now, the challenge we have now is this one to the downside and this one precede the move. So my demand area is going to be very wide now, hovering up to that particular low. Okay, that means in future you wouldn't be surprised if price keep tapping lower. Now, some persons, you spot a very, very good demand area, or basically you call it support. You call it support now. It's still the same thing, but you see, support is not necessarily demand area, and demand area is not necessarily support. There's a difference. Your support can just be a ranging area, but your demand zone is explosive. This is not just a support area. This is a demand area. This is explosive move, all right? Now, for instance, most persons are going to be marking their support like this, all of these areas and stuff. Now, you see price tap into it and go lower. But you're already buying here and it hits your stop loss, takes you out, and price goes up or possibly keeps going down. And I feel like price is already there now. No, you are not understanding that this lower week also matters a lot, right? So our demand area established is still working well for us. So it means that price will most likely keep bouncing off demand area and price will most likely keep bouncing off support area. But price is not going to be doing that for a long time, right? It's just, for me, once price has doing it maximum of 5 times, I'm not in again, because after the 5th time, price can decide to break out. That means potentially I'm going to take a loss on that particular instrument, possibly after taking some good profits. Okay, so so basically this is what we have for today. I hope you guys have learned a lot and you can use our analysis to possibly find some good trading opportunities. All right. So thank you very much for your time this morning. I think I'll call it a day. Someone said, let me, okay. Let me see. Go does that as well. Thank you for your confidence, Lukman. All right, let me drop it here. Okay. All right. So, Victor. So I just dropped okay. All right, so my contact is there. Now you can reach out also to your account manager or you drop your email and we're going to make sure that your account manager gets
Good
it.
morning.
Every information available when we are doing strategy sessions like this. Now, live strategy sessions, now basically within a 2 to 3 hour session, most likely
Good
I
morning.
like looking out for trading opportunities whereby at least not just come, at least for coming to the training, you should be able to make some money live and direct. I think practical is much more convincing than just theoretical, right? So thank you very much for your time. Looking forward to seeing you again tomorrow morning. Please contact your account managers. They're going to be giving you live updates on when we are starting. Remember, we are going to be having them Wednesdays now by some banks. Very, very excellent. Very, very good. Okay. So have a lovely day.
Hello.